everyone and welcome to Inderes TV. Today we're going to talk about Fiskars with Rauli Juva. This is not a new company to you, even though you're new to me in this chair. For how long have you been following Fiskars?
Yeah, indeed. Well, now a few weeks at Inderes, but before that I did cover it in my previous equity analyst position at Nordea, like some 5 years, maybe some 5 to 10 years ago. So I have known the company for a while. In that respect.
You go way back.
Yep.
Yeah, and we're going to look at the Q2 figures. Yep. And we mentioned that before, that you in the analyst report, the words better than expected was used a lot. So grow net sales and better than expected. Could you please elaborate that?
Yes, indeed. It was quite a bit above at least our expectations. So they were able to post 8% organic growth on a group level. We expected like flattish growth, and we knew that the Vita business, the decoration and tableware business was strong, but then also the Terra business with their gardening and outdoor equipment showed quite good 5-6% organic growth, even if the comparable numbers from last year were really strong, boosted by the COVID, and we were expecting clearly negative figures there. So that was a clear surprise. And then also the third smaller division, Crea, posted actually quite strong growth numbers. So very positive and positive surprise overall, like you said.
Yeah, this is now the 9th quarter in a row for Fiskars with growing net sales. Would you say that is mainly due to external or internal factors?
Yeah, if we look at the history, I would still argue that it's more of the external factors, given that period includes basically the whole pandemic period, which definitely did give a boost, like I mentioned, to the Terra division in particular. But definitely when they renewed their strategy a year ago and started to also implement their own measures to drive growth, that has had an impact now during the past few quarters, and then the kind of key question and key thing for them is to continue growing by their own measures when this market tailwind is most likely going away or even turning around.
Mm. Yeah, they used the words winning with winners. Yeah. So if I understand you correctly, that will mean that it remains to be seen still in the future if that will be possible or not due to the market situation.
Yeah, definitely in the short term it will be a challenge to keep up the growth. In the longer term, I'm quite confident that their own measures will be able to drive the growth. But in the short term, the market might prove to be quite challenging.
Mm. So the market situation. What about the consumers and their willingness to buy stuff in this environment, and secondly, the inflation as well has really impacted the margin.
Yeah, indeed. So the
if we start with the consumers.
The consumer kind of purchasing power, of course, is deteriorating, as we all have probably noticed with the inflation in many items. So that's precisely the challenge I was referring to. That I think that the coming second half of the winter season will be quite challenging for any kind of discretionary consumer company. That how will they be able to keep up the sales or even grow? So it will be a challenging market, and then like you said, remains to be seen how much Fiskars is able to offset that by their own measures, kind of, and how much will the market prove to be kind of be a headwind. And then on the margin, that was also actually quite big challenge already in the second quarter. So they did have, as they themselves said, they did have a 4 percentage point headwind on the margin from the cost inflation basically, and they were able to offset half of that with price increases and other efficiency measures. So quite okay, and that was also better than expected by us at least. But but they should be able to implement quite a bit more of the price increases and efficiency measures in the second half, and also offset the kind of the rest of that headwind. So in that respect, they are doing quite well, I would say, given the tough environment.
Yeah. What about the cash flow situation? Could you open up on that?
Yeah, that was basically the only negative part in the report, as we can see that the cash flow was still quite poor, as they have been tying up capital to inventories, which is partly quite natural. When your costs go up, your inventory value also goes up, but that's also due to the challenges in the supply chain and the possible shortage of gas, which is impacting some of their production facilities. So they are basically building up inventories, so they have enough products to also supply during the second half if there would be some more issues with the production, which they haven't had so far, but as we know, there's all kind of disturbances in the supply chain, so that's kind of a cautionary measure to have higher inventories. So I wouldn't be too worried about that, but if it would be that the demand or sales would go down, and then they would kind of end up having the high inventories when the sales go down, that could of course be somewhat of a problem.
Okay, yeah, that was interesting with the gas and production. I haven't thought about it, but that nothing to be worried about at the moment, but they have been taking cautions.
Yeah, exactly. So they do have actually a couple of production facilities which use natural gas in Europe, like quite a lot of facilities in Europe. So that might impact it if it would stop fully. And they, of course, everybody is working to find alternative energy sources as well.
If you think about the growth geographically, what would be the most interesting markets?
Yeah, well,
to look at?
They have themselves said in the strategy that they are focusing on USA, which is already a huge market for them, but still they want to grow there, and then China, which is
what about China? It's small, but it's growing. And what's the situation there at the moment?
It's growing fast from what it's like you said. It's only tens of millions, so not really a big part of Fiskars sales at the moment, but it's of course a huge market and a interesting market for especially the high-end kind of luxury type of products, and that's also Fiskars' angle there to go with these decoration gift type of products, and that has been going quite well, and I believe that will continue at least for some time given the low base, and let's see in a few years where they end up, and can they continue growing from a bit of higher absolute numbers.
Yeah, they have both web sales and own brand stores.
Yeah, exactly. So they have their own kind of brand retail stores, which should be also quite a profitable channel for them. So that's good in that respect as well. Yeah,
remains to be seen there as well. Yeah. So what about the valuation at the moment?
Well, that looks quite appealing, I would say. It's on EBIT, it's only around 10 times or even less with our current forecast for this year, and they have guided for the EBIT to grow this year, I would say.
Do you think it will be possible?
Yeah, we do have a slight growth in the expectations. I wouldn't be surprised if it would be only last year's level. I think that would still be a very good achievement, because that would be still way higher than it was, for instance, pre-COVID times. So if they are able to sustain even this profitability level, I would think it would be a quite good achievement, and even compared to the current share price, it would still look very appealing. And like when we expect growth in the future, that's of course makes it even more interesting.
Cheaper than its peers at the moment.
Yeah, that as well, slightly, and also compared to its history. So clearly, it's a question of that the market doesn't fully believe that they are able to sustain this profitability or profit level which they achieved during the COVID times. And well, we do believe, and let's see let's see what happens in a few quarters or next year.
Yeah, let's see what happens, and you can read the full research on the link down below. Thank you, Rauli, so much for commenting.